This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview.
Joining us today is Terry Lynch, the CEO of Power Nickel. Thank you very much for joining us today, Terry. The first time we're speaking, how are things?
Yeah, great. Great to be here, and thanks for having us on.
Well, I wonder if you could perhaps just first of all give us a bit of a high-level overview or the elevator pitch, so 60 seconds, of what the company is all about. Then we can go into some more detail on some recent developments.
Yeah, for sure. So Power Nickel is focused on developing the Nisk high-grade nickel sulfide project in Nisk, Quebec, just south and east of James Bay. We just posted our first 43101 around Christmas time, 7.2 million tons of 1.13% nickel EQ. So super high grade, and it's growing. Tons of additional exploration upside. So we'll ultimately get to north of 20 million tons and maybe as much as 50. So it's going to be a world-class project, we think, and we're drilling now.
Okay, excellent. So that 43101, that's given you say 7.2 million tons. And what grade was it?
1.13.
1.13. And can you perhaps put that into context for us in terms of how is that looking in terms of a nickel project?
Yeah, that's very good. For nickel, anything approaching 1% is fantastic. And so super valuable rock at that point. Yeah.
Okay, excellent. Well, you recently raised over $2 million US, didn't you? And this is, I presume, to continue exploration. But before we talk about that, how was the appetite for raising that money amongst investors?
You know what? It's solid. We've been benefited by the fact that we're in Quebec, and Quebec has these great financial incentives. Mm-hmm. So we raised the money at 50 cents a share. Our stock was around 23 or so. So we got more than double our price. Investors like to put money in when they put $1 in and $2 go to work for them. So that's been attractive. So we've had no problem. In the last quarter, we've raised almost $7 million. So we've had quite good appetite for stock, and it's for solid reasons because the ore body is just fantastic. At the end of the day, in mining, you can hide a lot of things, but you can't hide the ore body. If it's either there or it's not, and we got one.
Okay, so this money, how will it be deployed then? I know you started drilling only recently on the project.
Basically, to the most part, in drilling. The other thing that we're doing is we're doing a feasibility study on the project right now with a company called CVMR Inc. They're one of the larger concerns in the world of plants. So they're doing this feasibility study, so we're paying for that as well. So that's it's sort of a circuitous thing. They're paying for it through us. They bought the back end so we could get twice as much money in. So they're spending a total of $7.5 million to complete a feasibility study at Nisk.
Okay, well, I noticed that. So you have the support of this sort of industry giant CV, but I mean, they're paying for it. What's the upside for them in this?
They end up with 5% of the equity or
right.
So. Okay, and then their real upside is they're doing it because once they validate the economics, they would look to put up the capital stack to build and operate the mine. And we would end up becoming a joint venture partner. They've got 18 joint ventures around the world like this.
Okay, so they'd be looking to joint venture with you. Okay, on the feasibility study, then is that the work that's going on now? Is that all going into making that feasibility study? And when are you expecting to have that completed?
Yeah, so it's a staged process. We'll have the benchmark results should be out in a couple of weeks, and then we'll have the prototype results out in Q2, and then the final feasibility we think will be out in Q3.
Q3 for the feasibility study. Okay, excellent. And what will be the steps after that then?
Well, at that point, we're hoping that, we believe based on our seat of the envelope math that, the returns are going to be exceptional. So we think it would get a green light commercially. So next steps is really just getting after that permitting process and gearing up to, have a commercial decision, very quickly after that.
A commercial decision very quickly after that. Okay, and that's when you might do a joint venture with the company to indeed advance it into production.
Yes, we're obviously skilled at finding the ore body. We've never built a nickel mine, nor we ever attempt to, because that's not our skill set. We'd only ever do it in a joint venture with somebody who's obviously got 18 or 20 of these things around the world. So that's the only way it would make sense. So the cool thing about what they do too is they make finished products. So they make anodes, and they make fine wire and nickel powders and powders and precursors like MHP. So they get 2.5 to 3 times the nickel price for their products, virtually the same cost. So it's in I've learned in nickel, the money isn't in the mining, it's in the refining. And you really want to. It's virtually impossible for the nickel miner to get there, but in these circumstances, you can. So that's what's really fantastic upside for us.
And with that joint venture, then that would see you having that upside as well. You'd see it all the way to the end, effectively. I mean, yeah. Initially, your job is to prove up the resource, find out what's there, explore it. Then these guys will basically, if it's commercially viable, build the mine, get it into production, and then you'll both share in those rewards right from mine till the end.
Absolutely, and then you basically become a refiner, like as CVMR said. When the ore body runs out in 10 or 15 or 20 years, however long it lasts, we'll just bring in more ore. You know what I mean? So it's like that. Then you're like really more of a refinery business with those margins versus just a straight miner.
Okay. And in terms of the sort of appetite, perhaps at local level or government level in country for nickel and homegrown supply of these commodities, what's it like?
It's massively supportive. So we've got it, like we talked about at the outset about the exploration benefits of getting 2-for-1 exploration incentives effectively. So stock was 23, we raised money at 50 because of the tax incentives. So equally, sort of impressive is their support for development. So the governments would put up federally 30% and provincially 25% tax credits, which can be converted to cash to build a mine. So 55% of your mine could be, worked out that way. So really impressive. And so they're trying to cut the red tape to obviously get these green mines in production. And, we really can't ask for more from government in that respect. I've got lots of complaints about government, but in this case, they've done some good work.
Indeed, yes, indeed. It looks like they're actually putting their money where their mouth is with regards to these commodities. So hopefully the cycle will turn and it'll be a nice time for all involved. I wonder if you can quickly just go through the plans you set out in a piece of news not so long ago. We've talked there about the exploration at Nisk, which is clearly, you have other projects, but this is your flagship. We've got the feasibility study, hopefully Q3, as you said, with your partnership there with CVMR. But you also talk about the spin out of the copper and gold assets into a new company. So what's the deal with this?
Yeah, so we have some very impressive copper gold assets in British Columbia and in Chile. And we're spinning those out into a separate company. Initially, they'll be held private for a couple of months. And the reason why is that we do have a problem, as many companies do in Canada, with predatory short sellers. So this is a way to sort of trap them in their own device. So they can't replicate this private dividend. Only I can give that, or the company. So this will be one of those things. But the reason why we're doing the spin out is that development stage nickel is quite different than exploration stage copper gold. So it makes sense to have that in its own entity. And we used a very cool new technology called ambient noise tomography. And you should watch it. It's going to change the world, I think, in mining. Rio Tinto is their biggest customer, 24 million last year. It's Australia's fastest growing company. It's called Fleet Space Technologies. And we used it at Nisk, and we've identified 4 other pods. The way nickel sulfides work, generally speaking, every one in the history of the time is multiple pod. So we found this one pod, Nisk Main, which has got us to 7.2 million tons, growing to 10 probably on that pod. But there's 4, we think, another pods we've identified through this technology, same exact signature. And then we're drilling with that. We've sent this technology down to Chile, where we're the first to use it there in the desert. And that'll be pretty exciting for our spin out. So there's some interesting new tech coming in the business, and we're taking advantage of it.
Okay, yes, I've heard a lot about different tech that's coming in the sector. So that's new to me. I'll be looking that up. Anything else you want to touch on in terms of the plans? I know there was a royalty sale that you completed as well.
That's pending. We're hoping to get that done in late Q1, early Q2. That would add another 5 million or so to the coffers. So non-dilutive, which is great.
Okay.
Pretty much we're focused on drilling. We're drilling now. We'll be bringing a second rig in February. And so we're continuing to sort of forge forward and continue to post hopefully impressive results. And at some point, we hope the market will wake up to this best nickel investment on the planet.
Okay, well, it sounds certainly like your focus really is on the Nisk project and some of the other activities there, sort of clearing the decks, so to speak, so you can really focus on Nisk. And is that correct? Yeah. Okay. Good. So we can expect to see, all hands to the deck on the Nisk projects, and hopefully we don't have to wait until Q3 for the feasibility study. Will we get some interim results? So we head towards that.
We've got three. Yeah, the first one will be out in 2 weeks. Next one in a couple of months, and then the final. Yeah. So the big thing you'll notice in this, or the commercial public will notice, the investors will notice, when you make a concentrate, you leave a lot of ore in the ground. The nature of these smelters requires certain formulas, and that's optimal for them. It's not optimal for us. So in our case, our recoveries are around 70%. Whereas when we go through the recoveries with CVMR, we're expecting more like 90%. Okay. So that's like a 30% improvement, which is like massive for your economics. The other thing that's key is that when you make a concentrate, the iron, which is about 12% of our ore body, is a waste product. And with CVMR, they make iron powders as well, so it would be a waste product. So there's a lot of benefits to going that route.
Okay, well, it certainly sounds like a good joint venture you potentially have there in the making. Well, thank you very much for your time today, Terry Lynch, the CEO of Power Nickel, and hopefully we can speak again soon.
Sounds great. Have a great day. Cheers.
If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stockboxmedia.com. Thank you for watching.